All right, welcome to another episode from the Chart Readers. I'm really behind on replies and requests. I do apologize. Little rough on my side of the screen, but hey, happy to at least be doing this one right now. So we're going to look at AVTX SOUN and then DKNG. I love calling that last one Donkey Kong, all right? AVTX, there's a few really important things that come up. First and foremost, man, the 8 and the 20. These two lines are your worst enemies when you're below them. And I mean, it's been clearly below them for a while, right? So the other thing I always talk about is you can't get excited by more than one day. You need confirmation. Doji never counts, right? So those are basically going to be the big highlights here. And yeah, one more time, we're back at this 9-cent support line, right? Soundhound has been a beast, all right? I know it sounds really silly when I say, hey, you know, don't buy it under this line, like let it go up, don't worry, just wait for it to go over this and it should be better. Soundhound is the example of why I say that, right? Like once it was able to get over that pesky line, and that one was, I think, the 50 moving average, but yeah, it was pretty much just green, right? So there is a logic behind the madness, you know what I mean? And then Donkey Kong. Donkey Kong has been a beast, all right? It's actually very, very nice to see. Man, if we were in better market conditions, it would have been even better. But hey, good is good, you know what I mean? So we'll talk about all that and more. But before we go any further, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can please subscribe to this channel, share this video online with your friends, comment good or bad. Look, anything you can do helps me so much, but man, I can't tell you how appreciative I am of you just being here, all right? So let's get into it. An AVTX, look. I am not here to tell you what to do with your money. I am not here to spread fear. I am not here to do any of that kind of silliness. I'm also not here to be a fanboy and tell you things are good when they're clearly not, all right? There are moments when I get excited, but I always say you need more, right? And all that said is this AVTX thought right here, right? And the first thing I'm going to talk about is this day right here, this 11/14. I believe this might have been the last day I made my AVTX video. If not, maybe it was the day after, okay? But a couple important things to talk about. You always hear me say it. I literally started the video with it, all right? The 8 and the 20 are your best friends when you're over them and your worst enemies when you're below them, all right? And what does that basically mean? It just means it's really hard to get over the 8 moving average. And then the moment you do, the 20 slaps you down. You know what I mean? And if you just kind of look, like there are longer moments of being under it, and then you can see what happens when you get over it. But again, there's not a lot of like, we're under those lines a lot, right? And that's why I always zoom out when I do a stock review, right? Like it's important to know the history because I've made this roulette comment a couple times, all right? And the plastic ball in roulette does not remember that it's hit red 50 times in a row. That 51st roll is that same 50-50, you know what I mean? And with the stocks, it's not like AVTX knows it doesn't do well with the lines. And my belief, unfortunately, is, you know, we're staying under the lines, right? This 14th was a really positive day for a couple of reasons. Number one, we saw a doji, and again, you know, I'm not a candle shape trader, right? Like this is as much of a doji to me as this. I'll be honest, that's a doji to me too. Like I am not textbook when I say it, but when I see a doji near an important line, generally it's the moving averages, but if it's the all-time low support, because again, just going to the weekly, right? Sorry to zoom in and out so much. I kind of hate when I do that, but there is nothing below that 9 cents, right? Like that is the difference between you know, here and falling deep, deep, deep into all-time lows. So this is an important line to me. And when you have a doji near that, you're either gonna bounce up or you're gonna fall and die. And I literally called it the bounce or die moment right here, all right? Luckily, we bounced, and it was a great bounce because this is why I zoomed in. There is no wick on top. Literally, the entire candle was a full till the very last second. People were buying and buying and buying and buying and buying and buying and buying, right? Like that's strength and good. When you get the doji the next day, you didn't confirm. I don't care that we're near or on or close to the 8. This does not count. The day after counts, and that's what we saw the day after. And where are we now again? We're back at this 9 cent line. So why does that worry me, right? And again, if you haven't seen the videos, if you did, this is going to be like the last time we were down here, we hit it. It takes about 3 weeks. Well, you can argue maybe this and this, but like really we're talking candle, right? Like we hit it about 3 weeks later, we hit it again, super monster bounce, fantastic. So we really never hit it here yet, right? But to me, this was close enough to start worrying. I called that a bounce. And in a lot of ways, we actually have not yet hit it again. So maybe I am being just a little too, what's the word? Maybe I'm being a little too forward looking and making assumptions, right? Like we actually have not hit the line again. So maybe the strength is actually still there because yeah, we've actually only hit the line twice since August, right? Like, and when I say hit, like dojis don't really count. Like, you know, I care about the full body candle, right? And literally here, does that doji even hit it? It does. We hit it once kind of right there if you want to count dojis, but maybe the 9 cents still does have some strength. That said, all right, going back to what my previous thought was, it kind of was a 1, 2, 3 in this little 3-week window, right? In this 3-week window, it's very much here, then back to it in the second week, then right back again to it. And obviously here in 1 week, we very much just go bloop, right? Like to me, that scares me because I kind of always say it, right? Like there was a game back in the day when I was a kid. It was called Don't Break the Ice, all right? And it's like Jenga, right? Either way, you can get the concept, but you can only tap that ice so many times. You can only pull the little Jenga squares from a certain region so many times before bad things are about to happen. You can only use the support of a support line so many times. Like with the resist, like you can only hit it so many, it can only resist so many times before it finally breaks. It can only support so many times before it loses the strength and then you just fall, right? So again, maybe I'm being a little too cavalier. That's another word I like to use. Like maybe I'm assuming that these non-hits are actually hitting it, right? Like I think that's a fair statement. I actually don't think I saw anyone say that in the comments, but just kind of talking myself out loud as I'm seeing it, right? But I just don't like how frequently we've been down here. Like I said, in this 3-week window, it was, oh man, you can actually almost say it was the same thing because we were here near it by the end of the second week and then back to it that week. Interesting. Here, second week. No, and this one's actually a little bit, right? Hold on. Wow. 1, 2, 1, 2. Interesting. Okay. Ah, man. All I know is I'm worried about that thing being lost, all right? Now, I often say I don't know the math behind the lines. It always is odd to me when the RSI goes up, but the stock price goes down. Like literally, it's been going up since about the 6th. This thing has literally just been continuing to go down since the 6th, right? So little odd to me that the RSI is not quite matching up with the price. That said, where was it on the 6th? It was at 19. I think 19 is arguably just low enough to maybe want to reset back to that normal 50 before it maybe comes back down, right? Volume's just horrible, right? Like obviously there are way more red than green, like more people are selling than actually like holding by the end of the day, but more than anything, we are so below our average. We are like give or take 90% below our average every single day the last 5, 6 almost trading days. Like, we need to be at 100. We're basically near 10, right? So it's bad when volume's not there. It's bad when you're under moving averages. We're under all 5, let alone these 2, right? So I am not sure I can believe that we'll do this again. Again, the only way I think I would say technically I'd be wrong is, yeah, I guess we haven't actually hit the line. We've never closed on the line other than these 2 times. So maybe there's a little more strength, and maybe it's only a third hit than it's necessarily that like 5th, 6th that I'm kind of counting. 1, 2, 3, 4, 5, 6, right? Like, maybe it's not 6, maybe it's just literally 1, 2. And hey, I'm generally scared around 4 or 5, right? So maybe we do hit it and go up. Like, it's possible. I don't want to say it's not. I just really think that this 6-cent, that 9-cent line's not looking great, and that's a scarier doji right there too on the weekly. Again, very weird that basically since here RSI's been going up, basically since here MACD's been going up, since here all we've been doing is going down. Again, I'm not here pretending I know the math behind the MACD and the RSI, right? But I care more about this than I do these 2 going up, I'll tell you that much, right? So either we lose 9 cents and we probably lose 20% after that, roughly 2 cents, taking us down to 7, or we break this 10 cent, getting us over the 8 and the 20, and hey, maybe we'll come up to this 13 cent range. I've been talking about wanting to get in around 14. My problem is, like I mentioned on one of the last ones, if I get in at 14, my expectation is going to be we're only going to go up to the 100 moving average and we're going to stop around 17. Now, don't get me wrong, that is a 20% move, right? Because, 14 to 17 is 3 cents. Roughly 1.5 cents is 10%, right? Like, I am never going to say don't look at a 20% move, right? But yeah, I just, like I said on the last video, I wish we broke the 50 here with the hope of going to the 100 all the way up here. I wish we did it here with it going at least to there. I wish we did it there to, like, now if we do it, you know, at this point it kind of seems like I'm probably never going to enter this thing until we get over the 100, right? Like, that now seems like the real better entry to me, you know? And yeah, it's one of those things where I think volume is probably the most important of these 3. I think if volume can pick up, maybe that'll start bringing some life here, but this one's a rough one for sure. Hey, let me know if you agree or disagree. Otherwise, let's come into Soundhound. Hey, really quickly, if you can please subscribe and share the video, I would much appreciate it. But let's get into Soundhound. And oh man, okay, I started the video with this. I don't know if you just fast forwarded to this part, but very often you will hear me say, listen, ignore it down here and wait for us to go over here and go, like, going from 160 something all the way up to 220 is actually a very significant, it is, it's good money to be made, all right? The reason why I say it's just not worth it is because, again, when you see this horrible inability to touch that line, let alone get over it, right? When you see this like struggle with that 20, right? Like it makes me say, look, just wait till we can get over the 8 and the 20, right? Maybe if the spacing's a little better, you can consider things. But end of the day, I've been saying it. Once this got over the 50 moving average, specifically on this one, it should be easy sailing all the way up to, at one point I was saying 240, right? And I'll tell you why my 240 number's changing, right? But yeah, it was easy to believe. And again, I use the word believe because nothing's guaranteed, and you know, like it's cool to be right? But I don't want to pretend I'm like this perfect master thing, right? Like that's what, when you start believing too much in some random dude on YouTube, that's where you start losing some fat money, right? But yeah, once this broke the 50 right here, once it happened in conjunction with the NASDAQ ripping, with the NASDAQ gapping up, with the NASDAQ breaking all 5 moving averages on Friday the 10th, NASDAQ was ready. You know what I mean? On, where's the 10th? On Friday the 10th, we had that crazy doji that I remember talking about. And with the gap up, gave us the ability to break the 50. And once we break the 50, man, we marched to the 100 like a champ. Obviously, we didn't hit it, right? So, you know, technical analysis is not perfect. Like, I'm not here pretending that this set of moving averages and this set of lower indicator, I'm not even saying that the 1 and the 2, which is just a different version, but a different version than this one. There is no such thing as the perfect stack, right? But dude, break the 50, go to the 100, break the 50. We basically ran to it. You know what I mean? Little bit of a drop, nice little gain back here. And again, I'm going to go back to the NASDAQ. I'm surprised NASDAQ is holding a 90 RSI. For sure. Okay, NASDAQ is where the RSI should be textbook. Down to 30, up to 80, down to 30, up to 80, down to 45, up to 80, down to 45, down to 30, up to 45, down to like it should be as textbook as it gets. We've seen NASDAQ sub 30s. We're now living well north of 80s. Like it's actually a little crazy. I've been expecting the cool down. It's hard to imagine we're going to lose the 8 moving average if this thing does come down, because again, this 90 RSI is crazy. Trust me, it needs to come down. It's very, very hard to believe we're going to like NASDAQ's not going to all of a sudden drop to 13. Like, you know, it looks like the government's not going to shut down. Like, dude, the NASDAQ did its job, and that's going to help Soundhound. That's maybe not going to get us over the 100 on this one. I think, again, if NASDAQ cools down, this thing should also cool down. 75 is not necessarily really high. We obviously got pretty high right here at 81. And I know 81 doesn't sound that high, but just kind of look at the stock, right? So we've been up here for sure, right? We've been at 90s early February. Since that, though, look, I'm just going to kind of click right here. That white line has really never been touched. That's the next highest day, and it's a 77. What's you? Are you higher? 71. No, this 77 was the highest. I'm looking at the RSI in the box right there, right? Kind of in the middle. What are you? You might be a little higher. 75, right? Like, since this February spike of in the 80s, we actually have never been able to escape the 70s. So makes sense actually that we got to this 81 right here, the first 80 in 1, 2, 3, 4, 5, 6, 7, 8, 9.5 months. Sorry, I did the math stupidly. I should have just minus 11 from 2. But hey, you know, it makes sense to me. Again, I believe the stock wants to get back to this in the 90s, living in the 90s, living in the high 80s. Even this one looks like it was a 70. Like it wants to get back. If it could do it once, it can do it again. If volume can spike like this once, it can do it again. But like that again, I talked about the roulette wheel on the last one. The stock knows. It knows what to do. The other thing to kind of look at is, look, it's actually also been above them all and ran. So like a lot of eyes are, sorry, click right here. A lot of eyes are at this 260 line. That 200 moving average, man, if it could get over 260, there's a lot of green, 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 red, 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 green, 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 red, 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 green, 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 green that could come if we can get over this, all right? I'm not wildly sure this 100 moving average is going to be an easy break, okay? I've been saying a 240 target because literally, like you can see it on this 13th, if you look at the 100 average right there, it was at 240. Line comes down. As the line comes down, we lose our profit target, right? But getting to this line would be important. Hey, I would love to get over it, come back down and go again. That would probably be the best thing. I wouldn't be surprised if we hit it and then maybe come back down to actually where we're at now, maybe come back down to like 216. But again, NASDAQ is probably going to cool down. Soundhound will probably cool down with it. NASDAQ should recover and run and so would Soundhound too. All right, again, you know my hierarchy. No tech stock will do better than NASDAQ. Look, I say this with love, all right? Soundhound is still an unproven stock, all right? I've seen the skeptics say this thing's not much better than like talk to tech stuff. Again, I know nothing fundamentally about this company. I do not know what their AI does. I do not know how much debt they have. I don't know how much cash they have. I don't care, right? If you can get over this 260, oh man, I think it's going to be a little hard to get over the 100 moving average because, again, we just actually haven't even touched it. This is kind of irrelevant. The last real time we used it was right here. And yeah, it was a good support. Then damn, some like weird math right there. We lost and it hasn't even been like a thing. So yeah, I think there's going to be a little bit of difficulty in this. I think that'll marry in again, like I said, with NASDAQ. What's the weekly look like? Ooh, interesting. Ooh, we're just under this. Where are you at? 241. Where was that at? I know it was under 241, right? It had to be 234. 241's a really important line. I'm going to draw that. Just to draw. I'll eventually delete it, I'm sure. It lines up kind of nicely with that, kind of nicely with the top of that, almost on the dot with the top of that. That's an important line. I think this is what I would say. I'm glad I drew that. And this is where I'll end with Soundhound. Either we do not have the ability to get over the 100 moving average and we come back down, I think worst case, like I said, $2.14, $2.16, give or take, something like that. Or we get over the 100, we stop at 240, we then come back down to the 100, right? Because like, again, you know I don't know the math, but this thing's coming down, right? So we'll come here, then probably come here to 230, and then hopefully rip above that to break that and that. I think that's I hope that made sense. Oh, my kitty just sneezed on that. I have a weird superstition that sneezes are true. I think that's actually going to happen. There's no technical analysis behind the kitty sneeze. Let me know your thoughts and opinions. Otherwise, DKNG. Let's come into Donkey Kong. All right, DKNG. This is a beautiful, beautiful chart. This is so good. And I'm telling you, if we were in just a little bit better of a market, and don't get me wrong, it's actually a good market. It's not horrible right now, but if we were in a real better market, oh my gosh, it actually would have been a way better ride than this. But Donkey Kong has done the job like the beast it is, and there is a pun intended in that, all right? So, I don't remember when I made the Donkey Kong video. I know in the Discord groups, in both of them, in my chart readers one. Oh, you're sneezing a lot. What's my kitty doing? In my chart readers one and in the MEM one, excuse me. Donkey Kong was an easy one to call an alert on. All right, and when I say easy, there's really two reasons for it. Number one was how the market reacted to the earnings. All right, specifically, the market reaction to the earnings was based on forward guidance. All right. Now, that right there is a little more of a fundamental trading analysis sentence, but I'm going to say it one more time. I'm going to tell you why I care about it, even though I'm a TA guy, right? So, the stock market, in my opinion, is more about, and I almost want to say it's a fact, but I'll say it's my opinion, right? But the stock market is less about how the company is doing today, and it's more about what the expectation is for how it's going to do tomorrow, okay? Yeah, being able to pay your bills is really good, right? Not a lot of companies can do it. A lot of companies have to go into real deep debts to like pay their bills, right? Whether it's electricity, whether it's like the next level of research, or whatever the hell, right? Donkey Kong, DKNG, DraftKings, DraftKings actually gave very bullish guidance for the future. All right. And I didn't read anything. I did not read the earnings. I did not listen to the earnings. All I saw was the market's reaction to it. All the headlines were the same. Big things are coming for Donkey Kong. Big things are coming. Forward guidance was raised. Like they believe in the good of the company in the future. All right. So for me, that means between now and the next 3 months, because the next earnings call is going to be roughly 3 months from now, right? From now to 3 months, we're living in this Donkey Kong hype of, all right, we're excited. All right, we're excited. And look where it's happening. I haven't even zoomed out yet. Oh my goodness, look what happens between these two lines, all right? Green, 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 red, 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 green, 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 red, 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 green, 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 whole mess of nothing, red, 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 whole mess of nothing. Green, 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 dude, it should have been, it so far has been a fantastic run in a fantastic channel, because again, there's absolutely nothing else on this stock. I like, this is another beautiful example of break all 5 and run, right? Like obviously I wish I was looking at this thing back in the day, because this is definitely a nice set it and forget it. A couple scary moments with the moving averages, but the line's doing their job. Nonetheless, we're talking about immediate, right? With the forward guidance, the stock gaps over. So, and really, I guess it only gaps over 1, but this one right here breaks 2. That's how you confirm. That's how you keep going, and that's how you use the 8 moving average like a champion. I don't know if you watched the first stock I covered, but look, the 8 and the 20 are your worst enemies when they're below you, and this stock knows that. Like it's impossible to get over the 8. You finally get near the 20, and then once again you fall back down, right? Like, and then the 50, but like this thing is well below the 8 and the 20 for a long time, all right? It's actually over it, I would say, more than under it in this, like, what, 3 years, 4 years of its trading. So that's actually kind of a good thing. This thing historically likes being over the lines, right? It knows what to do over the lines. And man, even the next channel, even this 41 to 95, like look what happens between these two lines. And again, there's nothing back here. Green, 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 red, 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 green, 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 green. I mean, little whatevers. Red, 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 green, 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 red, 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 green, 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 right? Like just some hard fall. Like it actually could be a very monster run to here. And even in between here, there's not a lot of like maybe there was something I could have drawn there. Maybe there was something I could, obviously this is still a little too high. I kind of, you shouldn't really be having $50 dreams just yet. I think 41 is hard to imagine we're not going to hit. Dude, I even think, I just said don't think 50, and I'm saying maybe 50. I don't know. But either way, a lot to love. This 20 moving average is going up. A 50 is going to get ready, and the 100 are going to get ready to go up too. I mean, Donkey Kong has been doing its thing. All right, sorry to zoom in and out so much. Excuse me. This stock knows how to like live up here. And it wasn't that long ago. It was obviously wasn't in the 80s and the 90s, but it was holding a nice little horizontal. I'm just kind of zooming out and looking at the RSI numbers. Yeah, I mean, look at this thing. This thing knows how to live up here. It's at least peaked it and dropped, peaked it and dropped, peaked it and dropped, hit it and kind of held, peaked it and dropped. Man, I mean, I would obviously, I'm in this one. I'm not going to pretend I'm not. I would obviously love this to keep going. But yeah, maybe we see ourselves a little cool down. But hey, the really good thing is it is definitely knowing how to use the 8 to catch it. And hey, I talk about it, right? You can only hit the 8 so many times before you're probably going to lose the 8 and drop to the 20. The good thing is it looks like the 20 is on its way to catching up. So hey, if we lose the 8, it shouldn't be that hard. Like if we lost the 8 right here, it could have been a really hard fall to like, I mean, really probably this line. Maybe this would have caught it, right? I don't want to play the guessing game, right? But like on this day, we had an 81 RSI, right? And it would have made sense that, and like even on this day, if we lost this one, it's still like the fact that the 20 is starting to come up and it's actually looking like a good little exponential come up as well. The fall, if we lose it, shouldn't be bad. And look, as we take off, it gives us an ability to come back and go. Like this takeoff gives us an ability to come back, hold the 8 and go again, letting this kind of do its thing. Donkey Kong, there's so much to like on this daily. We have now broken doji doesn't count, monster confirmed that we're over all moving averages on the weekly. We're obviously over all moving averages on the daily. This weekly RSI was just living at 84, 86, 86 for weeks. We're only at a 65. It's hard to not think that we're going to get a couple decent weeks here. I think that very nicely sits with my theory that these two channels are beautiful. And yeah, Donkey Kong, there's a lot to like here. Volume is obviously looking really good. We were average volume of 12 million. You can see it in the box not too long ago. We're now slowly creeping up. Oh, it's still 12. I swear it looked like it was a bigger uptrend than it actually is, so I got that one wrong. But Donkey Kong, I'm liking this one. Hey, let me know your thoughts and opinions. Otherwise, as always, hey, thank you.